Warmly welcome to Equity Edge by Softlogic Stockbrokers. We are honored to have with us the Chief Financial Officer of Softlogic Life Insurance PLC, a seasoned professional with over 19 years of experience in finance, strategy, and general management. Recognized as the youngest CFO awarded by CMA Sri Lanka and a recipient of the Best CFO award. He plays a key role in shaping in corporate strategy and industry standards. So, good evening, Mr. Noor.
Good evening, Shamika.
So let's move towards today's discussion, the performance of insurance industry. So we know that Sri Lanka's insurance penetrations is currently low. And what are your thoughts on this? And also, despite strong fundamentals, how do you see the industry's unlocking growth over next 3 to 5 years?
Yeah. So, Shamika, before moving to that, let me give a little bit background about current status of the industry. So, 2024 is another good year for industry. So, where industry recorded 332 billion revenue. So, with growth of 16%. And out of which life insurance is main segment, which contribute 57 of the revenue with 182 billion and with impressive growth of 21%. Whereas general insurance other segments, so that also recorded 11% growth, and general insurance account for 130 billion. So that's roughly around 43%. So 2024, as I mentioned, is good year. And not only for insurance, 2024 is good year. If you look back last 10 years, insurance grew 6 times than the country's growth, which shows that how strong insurance industry. And as you mentioned correctly, I think insurance industry still, though we grew last 10 years, significantly it's underpenetrated. And our penetration is normally, in simple terms, penetration is measured insurance revenue divided by GDP. So that's a formula. Where if you consider our penetrations, we are currently having 1%. If this compare this with Malaysia, Thailand, they are exceeding 5%. That shows that okay, there's a significant gap is there we need to cover up. And put it to in simple terms that currently per individual is spending on average $40 for insurance, and a country like Thailand they're spending $400. That's been 10 times. And if you compare per capita 4,500, where Thailand that also 7,500, it's less than 2 times. But gap of insurance is 10 times. So, and what is reason behind that is that there's a study done, GDP and the relationship between the per capita and the insurance revenue, and there's a curve relationship is there. Now, as an industry, we are nearing that curve, and after some point, there will be a steep jump in the revenue. So, and we are nearing that point. With all that and all positive signs there from economic side, all expectation that economy will be growing 3 to 4% next 3 to 4 years, which means that okay, we can expect 20% plus growth as an industry next 3 to 4 years.
So, following up on that, especially considering the current global context, with ongoing economic recovery in Sri Lanka, but lingering challenges like global wars and currency volatility, how are life insurance balancing growth with the risk management in this environment?
Yeah. I think in the insurance industry, life insurance plays a very key role and leading role. And life insurance always sees unseen. And why I say that is that if you take the last 5 years, so I personally feel 2019 2024 is the one of the biggest challenging period as a country we face. And 2019 we had Easter Sunday, 2020 21 we had COVID. So then 23 24 we had full-blown economic crisis and the recovery. Despite that, life insurance segment recorded last 5 years 16% growth, which is roughly around 8 times than the economic growth. Most difficult period of the country, which shows that how resilient and how we turn challenges into opportunities. Let me give a simple example. Now, is COVID-19, it's the most pandemic time, where pandemic is not covered in the life insurance uh, normal claim system. So, however, life insurers put their hand up and they openly say, okay, we are covering life insurance claims which are coming from the pandemic situation. So, which I think brought a lot of attention. And with the pandemic, a lot of people feel okay importance of life insurance as well, and that's why life insurers came up with new products, and they turn COVID situation into positive anger. And let me give one more thing, like 2023 and 2024 economic crisis. Everyone knows that exchange rate depreciated almost 100% from 160 to 300 rupees. And later we experienced significant inflation as well. What made is that average health cost almost significantly jumped, almost double, right? If somebody hospitalized 3 days before 2023, average bill was roughly around 400 to 500,000 for 3 days. Now it's all about 1 million, 901 million. If somebody earning on average 500,000, 600,000, paying the bill of 1 million is significantly challenging. So, and that also basically life insurance turned into the positive way by developing new products. So, yes, every time we have challenges. This country always we have challenges. But when we face most challenging period with positive note, and I would say life insurance well prepared to capitalize opportunities and accelerate the growth with the positive momentum coming from the economy.
So, alongside these external challenges, demographic changes are also reshaping the market. So, we notice this increasing attention on urbanization and the aging population. So, how do you see these demographic shifts influence product design and growth strategies?
I would say these are very significantly impacting product design and the growth of the industry. Let me give some data, right? So, and it is expecting that by 2000, it's by 2030, our urbanization increased to 40%. And on the other hand, aging population increased almost 2 times from 12% to 24% by 2032. And what is mean is that if you look back 30 years ago, uh, general requirement about age population, so where children they had enough time to look after their parents, and healthcare spending was significantly lower because they were more dependent on the state healthcare. But if you look forward in 30 years time, children are busy and healthcare costs significantly increase because people will depend on the private healthcare. Obviously, so elderly people's requirements significantly change with the demographic changes, and there's a big need of insurance product for elderly people, like retirement products, healthcare products, annuity products. So, which will definitely open up a lot of opportunities, and as a country, we need that because that's an with the changes are happening. So big area, big opportunities coming up. So how I personally see is that insurance are well positioned to capitalize this opportunity than anybody else.
So, adapting to these changes is vital. And what about barriers? So, in your view, what are the most pressing structural challenges holding back the faster life insurance penetration, and how the industry is working towards to address them?
I think there are some barriers. Like again, being the finance person, I always go with the numbers, right? So if you go back to if you compare life insurance industry of the developed market, so and where non-agency business contribute roughly around 50% to the revenue, where Sri Lankan non-agency contribute only 18%. That means agency is main driver for revenue growth. So one of the critical barrier I see is that uh, there is a lack of development in the non-agency distribution channels, and because it is very necessary to create non-traditional distribution models to reach the different market segments cost-effective way. So I see another two barriers. One other one is that we need to overcome as an industry is that uh, we need to uh, develop innovative products to reach to middle to higher segments of the economy. Because now earlier we said about penetration is low. Why penetration is low is that when the country is growing, so growing segments are middle to higher market segments, whether we like or not. That's what happens, right? So then we need to come up with the products. This segment needs to feel that okay, there is a value from these products. So we need to so therefore one of the critical challenge current industry is facing to come up with innovative product that will suit to this middle to higher segment. Final challenge is that this industry needs talent. So this industry faces big talent vacuum. So a specialized industry, and in general terms, uh, insurance industry is considered as not attractive industry as a career. People feel, let's say, banking, IT is more attractive for some reason. So for personally, I feel that when people go by the when deciding the attractiveness, they go by the just sentiment. So for me, to industry to be attractive, that industry needs to have the space to grow, and industry needs to recognize the performance-driven culture, and obviously industry needs to have the space of career advancement and revenue growth. If we have all three options, so when that is there, only the industry become more attractive. And if somebody analyze industries putting these three criteria, so I don't see why talent is not acquired this industry. So it's all about lack of awareness, and program like today, I think we can fulfill the requirement some extent, but it's need to have the greater effort, not only for one particular segments, but also for all the segments, because this industry needs talent because we have a very lack of talents. Not only for sales, even so other areas also, let's say actuarial, finance, IT. Because somebody sitting in any other industry, they just can't come to this industry because there's a specialization attached to this industry. So that's a value being created. So those are three things. So if you summarize, we need to have the innovative products, we need to attract the talents, and we need to obviously create alternative distribution models to reach to different market segments in cost-effective way.
Speaking of changes, regulations are evolving as well. So, what are the key changes introduced by IFRS 17 in insurance reporting, and how has this transition process made the impact on the insurers so far in terms of opportunities as well as the challenges?
So IFRS 17 is the big giant fish in the tank in this industry, right? So I think where accounting standard board took more than 25 years to develop this standard, which shows that how complicated this standard. And why that is complicated, and when it's come to this industry is that when the absence of very sophisticated accounting standards. Industry practices a lot of different practices. So now with IFRS 17, so everybody wants to follow same kind of practice. So put it different practices into one basket, it's always challenge. And so what are the key challenges? Obviously, so currently, though insurers are selling protection business or investment business, everything, currently it is considered as a revenue. With the introduction of IFRS 17, this investment products revenue exclude from revenue recognition, and it will be treated as a liability, same as banks. That is main change. On the other hand, there are some sometimes insurers are recognizing revenue upfront. So now with the I-70, insurance revenue will be spread over the period of the policy. When it comes to the profitability, I think currently its profits are upfront. So that also again spread over the policy period with the I-70. Those are the two main changes. And challenges perspective, I think earlier I mentioned that obviously various practices we have, we try to put it to one practice, always challenge, we have data challenges, so on and so forth. But more than anything else, biggest challenge is that to transition to the IFRS 17, it requires significant investment. And on average, this investment cost is considered as a 300 to 400 million because it required to invest for systems, people, processes, and so on and so forth. And however, so there's a big benefit we can expect because with the changes of revenue recognition, with the changes of profitability recognition, there will be a big improvement in transparency in financial reporting. Nowadays, if somebody taken a P&L of insurance industry, especially life insurance, people can't understand what is happening there. Because, for example, investment product always recognized as a revenue. Because investment product in general terms, though we are collected, end of the period, we need to return that money with the interest to the customer. Same as banks. But banks is not recognized investment product as revenue. Right. So then, for management perspective or board of directors perspective, stakeholder perspective, with the post-implementation of I-70, they will be seeing real revenue of the insurance industry. And plus, they will be seeing how their profit is derived. Whether profit is coming from pure insurance business, we call it underwriting profit, and whether profit is derived from the investment results, investment profits, whether profit is coming from better expense management, we call it a source of profits. So all in all, transparency will be enhanced, and more than anything else, investors can see what is the unseen profitability of especially life insurance, because life insurance they write long-term businesses, and their profits, future profits of those long-term businesses currently you don't see from the balance sheet. That is hide in the balance sheet as a liability. With IFRS 17, you will see the future profitability as contractual service margin, we call it CSM, and they can take their decisions wisely, and obviously, so it will help for investors, it will improve the transparency, it will help the better decision making. Obviously, so though we have challenges, so expectation is that will have more value and benefits.
So, with those changes in mind, let's talk about another key area, digital transformation. So, this digital transformation is accelerating across the industry. And what are some of the recent developments or changes being driven by this shift? And what are the things that are not readily visible on the outside, but the technology is transforming?
Yeah, I would say insurers leading this digital acceleration in this market. Why I say that, if we take the currently insurance business model, we have the underwritings, claims, servicing, financial reporting, so on and so forth. So we didn't stop from just digitalization. So now currently, so if you take the AI, artificial intelligence, this industry significantly adapted. A lot of insurance players are currently use artificial intelligence for underwriting, product development, claim settlement, financial reporting, enhance the service standards. So I think this industry lead AI integration to the business more than anybody else. And because of that, a lot of insurers set new benchmarks, and especially claim settlements. And what is happening is that this was very clearly evident that how insurance industry adapt digitalization. When COVID-19 hit in our market, one of the first industry who came up uh, uh, came out from this COVID situation is the life insurance, because their business model significantly digitalized, despite they are in the service industry. So they were able to up their business model within few days. That is the significant evidence to show that how robust their business model with the digital environment.
Technology is clearly reshaping the process. So, from an investor perspective, though, how should an investor go about understanding of the valuation of an insurance company?
That is a very good question. I think uh, obviously insurance industry is unique. So when somebody try to understand unique industry, you can't apply layman approach. Why insurance industry is unique? Their business model is complicated. And for example, that life insurance, so their profit is derived by underwriting or taking long-term business contract. So when evaluating the profitability of long-term business contract, which involve a lot of estimates, and advantage of that, if you compare life insurance against the ordinary business, uh, when life insurance underwrite 20-year policy, that's mean 20-year policy's profit already locked in the balance sheet. But if you compare this with the normal trading company, it's all about transactional, like you sell good to customer, they consume, finish. It doesn't give a guarantee that consumer will consume over the 20 years. Okay, so that's why it required to have different approach in understand the valuations. And coming back to valuation perspective, a lot of people, I heard that, okay, just they compare PE ratios, price to book value, to evaluate the life insurance especially. That is, I would say, is not advisable, because fact that earlier I mentioned, taking, let's say, price to book value, so net asset only represent the declared profit. I would say life insurance bigger profitability lies not in the net asset, because they underwrite long-term business. That profit already locked in, and that profit is there, right? So, but unfortunately, with the current reporting structure, you don't see it already locked in. So this unseen profit need to consider. We call it value in force in technical terms. Value in force of existing business. So real value of life insurance is net asset plus this value in force. We call it embedded value. So in global terms, so when investors are taking decisions, they use this embedded value approach to value the company, because net asset only represent part of the assets of the life insurers. Apart from that, I think few things need to investors to be aware. And industry to be attractive, it has to have the opportunity to grow. To grow the industry, size doesn't matter. It's all about opportunity matters. Earlier, I mentioned that in the Thailand, having 7,500 per capita, and they are per individual spending $400 for insurance. Where Sri Lanka is having 4,500, they only spend $40. So if we can reach, slowly if we can improve our per capita, we have 10 times opportunity. We have 10 times opportunity. And on the other hand, we have very good track record as an industry to grow in top line. We not only grow the top line, right? So because we have good track record to record very attractive return on equity, which was ranging roughly 18 to 20%. If somebody sees, if you analyze the industry as a whole, last 10 years, which was the industry who recorded more than 18% ROE, we might find very one or two industries. Obviously, with the opportunity, with the good return environment, and obviously those are the few factors we need to consider. With the appropriate valuation approach altogether, I think investors need to carefully consider. We cannot just compare, let's say, life insurer with the normal buying and selling company, because the factors I mentioned earlier.
That's really insightful. So finally zooming out for the broader regional view. So in your opinion, how does Sri Lanka's insurance industry perform compared to its regional peers, as you said earlier also? And how do you see the future growth is unfolding, especially considering the current favorable context?
Obviously, I think earlier I mentioned that we face most difficult period as a nation. Despite the difficult period, the industry as a whole, we grew double digit 6 times, 8 times than the country's growth. And one other point is that there is a significant focus is there to improve the business models of insurance industry. There's significant investment going. There's a significant automation focus is there, significant adoption of latest technology, and they want to innovate. Plus, external environment expectation is bright. With the opportunity, with the focus, business model focus, and with the positive external environment, I would say insurance industry is well positioned to change this landscape and to be more significant industry in Sri Lanka. And I would say it will be the industry where everybody has to focus as a I would say rock stars. So insurance industry can be a rock stars in this country in the future.
Thank you so much. So, apart from the things that we have discussed so far, we have received another questions from our audience as well. So, so that's basically regarding the Softlogic Life acquisition of Allianz. But today's our focus is on insurance industry, so I'm not going to talk about it also. So, I'd like to frame it like this way. So, with more than 10 general insurance and 16 life insurance in the Sri Lankan market, do you believe continued consolidation is the way forward for the industry?
Being the finance person, my answer I would like to start from stat. If somebody analyze last year's industry data, so I mentioned that there are two segments, life and GI. So life segment, top 6 companies contribute 84% of the revenue and 84% of profitability as well. That's mean balance 9 people, they only contribute 16% of revenue and 16% of profits. 9 people. Same thing if put it to general insurance. Top 6 people, uh, they also have 80% of revenue and 94% of profitability. That's mean balance 8 general insurance players, they only have 6% of profitability. If somebody analyze this data, my answer is obvious. Answer is obvious. Apart from this, so earlier I mentioned a lot of compliance requirements are there. Somebody can say why you put a lot of compliance requirements, because there is no excuse. We are dealing with public money. So when somebody comes to deal with public money, they are coming with the intention. So there is a compliance cost, and to cover that compliance cost, they need to have a very strong business model. When life insurance balance 9 people having 16% of market share, when general insurance balance 8 people only having 6% of profitability, obviously there is a big question about their business models. There's a big opportunity of consolidation, and I think that's what you notice. And there is no requirement as a regulation. Business model itself, I think answer will come, because there is, I would say, there is a lack of business sense to have this much of insurance companies if we analyze the current data. So I think rather than I am telling, so by looking at the figures, answer is obvious. That's what you are witnessing now, and it's all about who move faster, because if somebody move faster, they can unlock some value. If he can stay and if he can wait, sometimes there is no value. So it's all about taking decisions at right time matters.
That's really insightful. So there's also another questions regarding interest rate. So for insurance sector, how do these interest rate impacts? Can you explain the relationship behind this?
Absolutely, insurance sector interest rates are very important. I think more than the general insurance, life insurance, this matters. Because general insurance are very short-term business. They write 1 year business, so then interest rates are not really impacted. But life insurance, they write long-term business, long-term liability. Sometimes policy turns 20 years, 25 years, 30 years. And on the other hand, for asset perspective, we don't have long-term assets like 30 years, 40 years kind of thing. Our asset duration comes to 5 to 10 years. So that means there's a mismatch asset and liability. So therefore, there will be duration mismatches there. In order to minimize this, it is very much important to have the very strong view about interest rate, when to lock, what to lock, and what is the time we want to take the move is very, very important. And if you play this one properly, so insurance plays in very important position to capitalize the economic opportunities, because they are the people who has the money to place it long term, and they are the people, they don't have pressure about liquidating the asset, because they already locked their money, and policy terms are long term. There's no much demand is coming from policyholders to take money before the maturity period. Therefore, they can plan their investment climate. Yes, there is a risk because of, as a country, we don't have much long-term assets. But since we are, I would say, developing country, our interest rate cycles are swing everywhere. 1 year that goes 1200 basis one way, other way around after 6 months. So therefore, one thing is that if we carefully analyze and predict the interest rate environment, so insurers are placed in very important position to capitalize the opportunity. And if you fail to analyze and take the decisions on time, obviously insurers are placed in the riskier environment than anybody else. It's all about predicting, taking decisions properly with the calculative risk is matters.
So thank you so much for taking such time to explain your thoughts today. So it's been greatly valuable for us to hear out your thoughts, not just on the numbers, but also future outlook and the strategy of the sector. So we are looking forward to seeing you and your team to lead and innovate in this space. Thank you.
Thank you, my pleasure. Thanks for inviting me.